Everybody, welcome to Oddsjam's Sports Betting University. I'm happy to be here with you. Normally, you'll find my stuff at A-Train Bets because I'm the A-Train and I make bets. And I'm excited to share with you some things today around how Oddsjam really works, some of the fundamentals underlying it, and then how Oddsjam's tools take advantage of some of those fundamentals, and then how I try to extend and what I'm trying to do to help folks in this space. And so really, I think the fundamental thing, the most important thing that you have to understand why Oddsjam works all starts with the efficient market hypothesis. What it says, the efficient market hypothesis says that all of the available information is baked into the prices, or in our cases, the odds. And what that means is that the market knows more than you do. Always. Always. The market, the collective wisdom of everybody out there buying and selling or placing sports bets on either side, that's going to lead to a more effective price than you're ever going to know yourself. And so what that also means is that trying to outthink the market is no way to live. You should not be saying, well, I have this feeling on the Lakers tonight, they're due. Well, the market already knows exactly how due they are because there's millions of people with opinions on that. And they're going to put their money into a place, whether it's for the Lakers or for whoever they're playing, and they're going to have a price that reflects that collective market wisdom. This is the most important thing to understand before you start using a tool like Oddsjam, because everything we do is predicated on the fact that an individual, if you're trying to make profitable sports trades, you don't know more than the market does. You will never know more than the market does. And that is because there's so many more people who are all trying to do the same thing. Don't go and try to outthink the market. Okay, so that's step one. Understand that efficient market hypothesis. And there's certainly more videos and tons of additional research you can do, but I think that you have to understand that before you try to do anything else. Okay? I'm going to extend that though. And this is an area that I don't think is as well understood. If you naturally extend this, and this is using just basic economic and game theory principles, if you extend that understanding of the market, the efficient market hypothesis to the point where you say, well, if all of the information about the sides, in this case, which teams or which events, the totals, whatever we're talking about in an individual bet, if all that information is already baked into the price, then trying to use that information at all becomes counterproductive. Because what happens? So say you have this feeling, oh, this team is due. And you forget the fact that literally everybody else has already had that feeling too. Like the market has had that feeling, right? They had that feeling before you did. Nobody has all the information as an individual. The market has more information. Can you agree with that? Well, if that's the case, then if you take a subset of the information you actually have, and use it to make the trade, I think the Lakers are going to win, then you have a situation where you are overweighting the information that you do have and ignoring the information you don't have to place a bet on the side for the information that you are interested in acting on. That means you're overweighting it. You're putting too much emphasis on it. And now you are going to place the wrong side of the bet because of it, because the others in the market who felt that same way have set that price at a place where that's fair. That fair price is there. If you're going to go to the other side based on your market knowledge, based on your feeling on the team, you're going to the wrong side. That's the thing. You're overweighting a subset of the information and then choosing that side. It's the wrong side. This is why the sportsbooks make so much money, because the natural human instinct is to think you can outthink the rest of everybody else. That's what you're trying to do when you're betting on sports. Don't do it. But if you've ever had that feeling like, oh, I had that right side, I just barely lost. No, you didn't. You didn't have the right side. You just barely lost because the market priced it perfectly. And that happens a lot more than you might really think about when you're trying to place those trades. So do not use your sports knowledge at all to be an effective sports bettor. The more you attribute your own knowledge of sports to sports betting, the worse you are going to do with a tool like Oddsjam. It is counterproductive to the goal of being a sharp bettor because that information is already appropriately in the market. Next, what we have to understand is that efficient market hypothesis stuff is all true, and it plays in both sports betting as well as the financial markets where all this stuff was developed. One of the big things that we're going to talk about later is that sportsbooks need to realize they're not bookies. They're actually financial institutions, and they need to act like that. We'll get to that in a minute. But what we have to understand is that there are differences between sportsbooks and financial exchanges, stock exchanges. And I want to talk a little bit about what those are because they are really important to the Oddsjam methodology. First, in stock markets, you have things like the New York Stock Exchange or the London Stock Exchange or Tokyo or whomever, where there's all these stock markets all around the world. But how do they operate? They are there. They facilitate transactions between a buyer and a seller to additional parties. So you have the third party, which is the stock exchange, and then you have the buyer and the seller. Okay. In a stock exchange, then, when information happens at one stock exchange, it's electronically and basically instantly shared with all the rest of the exchanges. And so you end up having very close prices, if not identical prices, across all the exchanges out there. Okay. So what that ends up being is a very liquid market. And those pools of liquidity are all connected. In sportsbooks, though, all of the pools of liquidity is what the exchanges are effectively called. All the pools of liquidity in sportsbooks are all disconnected because there's a fundamental difference in the way they're set up. Sportsbooks are risk takers, where instead of you as a sports bettor betting against another sports bettor on an exchange, you're betting against the house. You're betting against the book. The book has its own pool of liquidity, its own resources that it's using to buy and sell on the sports bets. And instead of like buying and selling one stock that represents something over time, instead you have a buy or a sell on a team. I'm going to pick the Lakers, or I'm going to pick their opponent. And that's really the effective parallel between buying and selling in stocks. Well, in sports betting, house is the counterparty is what it's called. The person you are doing the transaction with. They are actually carrying risk and taking on risk anytime a bettor places a bet with that book. Now, the way the books make profit is that they have a differential between what they're going to take one side of a bet at and what the other side of the bet they'll take is at, and they'll offset that and they'll make whatever's in between as a VIG or a house advantage. And their goal is to try to manage their risk. They're not going to try to do it perfectly. They'll carry some risk in the bets. They know they're never going to match dollar for dollar on both sides all the time, but they're trying to have a reasonable risk management strategy because they're carrying risk on both sides of that transaction, but they're making something in the middle. So what we do with Oddsjam, what we're going to do as sharp bettors is we're going to look for opportunities where the market clearing price across all books, where we can determine, okay, what would the market price be if all these books were connected to each other? If they were all connected to each other, what would that price be if it operated like a stock exchange? But it doesn't, right? So each of these books, when they're managing their own risk, very reasonably, they've set different odds. They've set different prices. They have different customers who have different opinions that they have based on their sports knowledge and the bets that they're making. And so they're going to end up in situations different from one another. They need to be able to set different prices so that they can manage their own collection, their own portfolio of risk. So that's where sharp sports bettors come in, right? We using Oddsjam become what's called very price elastic, which means we're highly sensitive to what those odds are. And when a book sets some odds that are different from what that market clearing price would be, we can gain a profit from that by taking the side of the bet that is far enough away from what that market clearing price would be. And what that implies in the market clearing price is what are the percentages of what that event is likely to be. If we can find a price that's far enough away from those percentages that it overcomes the house VIG or house advantage, then we make a profitable positive expected value bet. This is actually in service to the sports books themselves. And so this is what kind of blows my mind, right? Where you have these books that limit action from sharp sports bettors when they should actually be thanking the sharp sports bettors for being highly price elastic so that they can manage their risk more effectively. Because what happens when there's sharp sports bettors out there, as soon as the book adjusts its price a little bit to a threshold that it's worth our time to go and place bets at, they can manage their risk like that. They can manage the risk very quickly. And that is a service to them. That is something where they can all of a sudden get assets to offset their bets that they've taken from the public very, very quickly. Should they pay a fee for that? Should they pay a charge for that service that we're providing to them? Yeah, that's our profit. That's exactly how financial institutions work. They're happy to borrow money from each other and pay each other a little bit so that they can manage their risk appropriately. Sharp sports bettors do exactly that. We do exactly that for them. So these books that limit the sharp sports bettors from being able to put bets down are actually penny wise and pound foolish. Yeah, I get, like, you don't want to be, beat by little old A-train bets. You'd hate to see them make a couple $1,000s off of your sports book, but you forget it's because of sharp sports bettors like A-Train Bets that you can manage your risk so much more effectively. Some of the books don't get that. They think they're bookies. They don't realize, they're not just bookies with business cards. They are financial institutions managing portfolios of risk at a much bigger scale than you or I or anybody's ever going to do as an individual. That is what this business is actually about. It is about being an operator that's providing liquidity. We as sharp sports bettors are market makers. We are market makers in sports betting. And that is the game here. We are not dealing in sports in how we are placing profitable sports bets. We are in a place that is determining the pricing and the outcomes based on events. And it's a heck of a lot of fun. It's a lot of fun to watch the sports with bets on it and do that. That's all good. But if you want to make money sports betting, you have to remove yourself from the entertainment aspect of the sports and recognize you are now in the business of being a financial industry professional doing a service to the markets, to the market makers, to the sports books that need liquidity. We provide that. Okay. So how then, we have to ask ourselves, how then does Oddsjam facilitate this? Well, I want to show you. I'm going to pull up the Oddsjam positive EV screen. And the reason I want to bring it up, and there's videos that go through all of these in much greater detail, but I just want you to understand how it connects. And this is where all of us start our days, right? So from Alex Monahan, I start all of my live streams by going through this page. Anyone who uses Oddsjam is using this tool. Absolutely. Right. And in this case, I just want to glance at this one bet that's recommended. Very typical Major League Baseball total runs bet. Okay. And this one is one where we have the percentage EV on this particular bet recommendation is basically saying we have determined, and by we, I mean Oddsjam has determined through their algorithms that the market clearing price at where it would be zero VIG, but where if we had a plus 196 or a minus 196 on this side of the bet, that would be the true fair odds or no VIG odds, which takes into account no house edge, because we are only interested in bets that have a positive edge for the player. So not just zero house edge, which is where it starts, but key to the calculation is to say, in this case, if we have a no VIG odds of plus 196 and the odds of plus 210 are what we can actually go place at a book, then we have a 4% edge on that long term. Now, the side that this particular bet may win or lose, but because of the odds of the event actually occurring, which could be more than 50% or less than 50%, we make a lot of bets that are less likely to win than they are to lose. But the price that we get when they do win is so much more that it offsets that. And so that's where we have to be looking at the math alone to just say the market has determined in this case, it's really less likely that this bet comes in over 6 than the current line of prices is. So it's more likely that the total runs are going to be under 6 than the price would indicate. So that's where we think it's more likely than plus 210 would indicate. The right number would be plus 196. So it's a less than 1/3 likelihood in terms of price, but it's a more than 1/3 terms in terms of the price we're actually getting. So we actually should place this bet with an expectation on this $130. That's Mike Kelly recommended. You can find more information about Kelly in other videos, but the Kelly criterion says I should be at 130 and I should make 446 on that, 4.46% on that 130, which means I'm gonna have a little over $5 that are going to be expected. If I were to place this a million times, I would make 4.46 times the 130. And you do that across a bunch of different bets. And on a daily basis, you're getting that several percent. And you're going to win some, you're going to lose some, you're going to vary. Some days you're going to win and lose. But over time, you're going to be in that 3 to 5% on a compounding daily perspective, which is why this stuff can snowball so quickly, is that you're growing that bankroll. It's not 3% a year. It's 3% today. That is a big difference, right? So this is why this is so powerful, is that Oddsjam allows you to see, hey, there is a differential here. There's a discrepancy between the 210 and the algorithmic odds that they've determined is the true market clearing price. We can do better than that market clearing price. We have an expected advantage. We have a profit in this trade. Fliff is happy to give us that so that we will bring our business over to Flip because they want the liquidity. That is what their price is saying in the context of this market. Now, they may not even know that. They may just say, hey, we think the price should be this, and that's fine. They may not be realizing the implications, but I think that's why there's some maturity to be gained in the context of all these sports books. So what I've done and what I spend a lot of my live streams and time doing in betting is saying, algorithms are great. They can pull in a lot of good information into this positive EV screen, but they don't catch everything because there's different amounts of prices available. There's different levels of confidence. There's different criteria. There's different sharp books in one place or another or what have you. So what I will do a lot of time is I'll use the arbitrage, or in a lot of cases, I'll use this low hold screen. And what I do with this is I am actually looking for opportunities where I can perceive a market opportunity that maybe doesn't pop into the positive EV screen for whatever reason. So what we're going to do, and what I do in a lot of my live streams, is I use this calculator spreadsheet. And all this is I've put together some of the calculators, many of the calculators that Oddsjam just provides, and I just do it in a spreadsheet format where it's fast for me. And so in this case, what I'll do under book odds is I'm just going to type in the best odds that I see right here on the screen, because these are the odds I can actually get at books available to me, where I have accounts or where there's, where we can actually place the bet. And then I'm going to be looking in the reference odds column. I'm going to be adding in a representation of the market. Now, a good place to start with that is Pinnacle. Pinnacle is a place where you can go in and, Pinnacle's the sharpest sports book in the world. That's widely known because they are global. They take the most action and they have the highest limits and the lowest VIG. It's a great place for sharp bettors of all kinds to go place wagers, right? And so they take the most action. And so they have a vested interest in having good, sharp lines. And then what we can see in this case, and you can learn about some of the details separately, but this is a measure of confidence. Pinnacle's got a 19 width. This is a confident trade or confident bet on this first inning total runs bet for Seattle Mariners and Atlanta Braves. Again, this could be any bet, right? And they could say, okay, well, and when we're comparing to Pinnacle, we see a minus 119 wager that is over here at Bet Online, where we could say based on Pinnacle, if we believe Pinnacle is a fair representation of the market, or we could say, you know what? We think Pinnacle is a fair representation of the market, or maybe Bet Online's also a pretty good representation of the market. Sometimes I'll do this, is that Bet Online's a pretty sharp book. I may say, oh, well, based on this, I don't see enough EV. I'd probably move on from this bet in actuality. But in terms of understanding the mechanics, it's as good example as any, is that we can see compared to Pinnacle, there is a positive EV play at Bet Online of a 1.19% EV based on a no-vig calculation, just coming from Pinnacle alone, of minus 122.15. And in these lines that we got from Pinnacle, it gives us a percentage as this reference, no-vig, of what is the likelihood of this actually happening. We say, well, on this minus 119, the actual likelihood of it happening is 54%, nearly 55%. But with the books prices, or the best prices that we can find in the market, it's implying, well, the likelihood's only 53%, which means we're getting a premium. It means when there's a differential here, that means that we have a mathematical advantage, because if we assume the actual likelihood is 55%, but it's only being priced like it's 53%, we're going to win more often than what that price would imply. So we can invest on this in this case, it's a favorite. We can invest in a favorite priced at 53% when it's actually 55% that it's going to win. That differential is going to make us money. And that's what underlies everything with Oddsjam. So if you use something like this calculator where you can plug in your own bankroll and you can plug in this, you can do this with Oddsjam's calculators, or you can develop your own spreadsheet because that's the way you want to work, whatever. But this is the same math, the same underlying logic that you see back over here on the positive expected value page. Because in this case, the only difference between what I just did in a spreadsheet versus what we see on the positive EV screen is that we have the Oddsjam algorithm baked in to determine what the no-vig odds are. And that additional insight, which they can pull from multiple shot books, they can do a lot more to get a highly confident line on that no-vig odds. That's going to be reliable for us. But really, to do positive EV betting, you don't have to have an Oddsjam calculation done for you. You can do that calculation through something like a spreadsheet with any set of lines. The real benefit, one of the things that I think sets Oddsjam apart, is all of this. This is just such a small set too. Oddsjam has hundreds of feeds of data of all these books. So they're pulling in pricing from all of the books across all of the world to get to a sense through their Oddsjam algorithm of what that market price should be. So if you know what the market price should be and you have a price you can go place at a book, you can run a calculation and you can determine, is there an EV play here or not? Because a lot of times there's not. A lot of times there's nothing that overcomes that house advantage, right? So that's where I think it's really important to understand the math and the makeup of what Oddsjam actually does, so that you can apply these tools. These are tools. These aren't answers. These aren't, here's money in your pocket without doing any work. There's work here. You have to do work. You have to learn this stuff. If you want to be a sharp sports bettor, you got to sharpen that blade, baby. You got to sharpen that blade. And so you have to be able to say, here are the tools and I'm going to use them effectively and I'm going to go at it. And I'm going to provide the service to the sportsbooks out there by helping them manage their risk through providing liquidity, which is us placing bets. And we definitely deserve to make some money doing it. And you can bet we will. And so with that, I want to just come back and close it out because there's a couple other things to think about, right? And so how we do the work with Oddsjam, I think, is really important. And that's something that you have to spend some time to learn. You do not pick this up overnight, but it is worth learning and it is going to transform your success in how you do sports betting. Now, the reason I'm doing this, talking and creating content and educational stuff, is that I see there's a big transparency and credibility issue in the sportsbook world. And it's, you have so many people who are like, follow my picks. I got the pick of the day, baby. I know all this stuff. No, you don't. The market does, but you don't. You know a subset of it. I'm so annoyed by all these touts out there acting like they can pick sides better than the market can. They can't. They cannot do it. Unless they have insider information, then you might be able to do it in certain circumstances. But I'd rather trust the market to do that side of it, of picking what the likelihood should be. What should those prices be? The market's got that covered. We can, though, operate in this like stock traders and find real sports betting opportunities that lead to real profits on a very consistent basis. Yeah, you're going to have losing days, but you're going to have pretty few losing weeks and you're going to have even fewer losing months. You will have some over the course of years, but the variance will work out in your favor if you continue to do it. And the best advice is to just do it consistently, right? And so my goal with all of this is I want to educate a new generation of sharp bettors. We have opportunities to do with all of these online books. This hasn't existed before this way. It does now. And I want to teach people to do it because I'm so tired of watching people get taken advantage of by books who are playing the entertainment side of, oh, it's so much fun to do the same game parlays. Oh, it's so much fun to do the parlays and all these other promotions and everything. It's not that much fun to keep losing money, though. So I think, personally, it's more fun to be a winning sports bettor and then watch sports because I love the story. I love the drama. I love the game. Those are things that are worth doing. That's worth entertainment worth paying for. Don't pay to gamble without an edge. Use an edge and provide liquidity to sports books that need to manage their own book. That seems like a much better trade-off versus letting the books hypnotize you into thinking, oh, it's fun to lose my money. I'll get that re-up bonus. No, you won't. You're not taking that out. You're just going to lose it. So the fact is that I am trying to put my money where my mouth is and do something a little bit different with content because I think there's not enough people being credible and transparent about what they're doing. So I do daily live streams where I'm putting in my bets. I was going to put in my bets anyway. I might as well stream it and talk through it, teach people how to do it. Yeah, I put the bets in front of you. I show you putting the bets in. No hidden stuff. None of this nonsense from the touts you'll see where they'll be like, oh, I've got this pick. I sold it to my clients. I didn't actually bet it. None of that. I don't even want you to bet. Don't follow my bets. I don't care if you tail my bets. Tail the process. Learn the process. Do it yourself. You'll have different books you'll have access to. You have different bankroll. You have different times a day where you're doing betting. Go at it. Tail the process, not the picks. Because you can do this too. This is not rocket science. You can understand the math. You can use the positive EV tool and make a ton of money and continue to build your knowledge and continue to find opportunities, ways to use these tools in an effective way. That's what I want you to be thinking about. That's why I'm doing this content, is that I know I can help you do that. And to me, I'm so annoyed by so many of these charlatans and snake oil salesmen out there saying, oh, I got the big brain, I'll tell you the right pick. No, you won't. No, you won't. And so to me, if you use positive EV tools, if you find positive EV plays, at least go tail the folks that are using Oddsjam, because they are at least doing that. But I'd still say you're going to be better off if you use the tools yourself and find those opportunities in that moment, because these go quick. You know, they're not milliseconds like trading opportunities in the stock markets, but they'll go within seconds or minutes. So you got to be on it. So that's where I think learning this stuff, becoming a trader yourself, or stock like sports bettor, whatever you want to call it, that's where I think a lot of this is really going to go going forward. So I do my live streams every day, 7:30 a.m. Central, 4 p.m. Also on weekdays, and then I do them on the weekends when time allows. I also have a ton of videos on my YouTube channel that teaches you each of the different pieces of this, because I think everybody should know it. You know, I have 25 years in data analytics and building data systems, financial industry, and all of that. And I'm like, there's literally nobody with my background doing this in the sports betting space. I think it's time to help make sure people have this kind of information at their fingertips. And that's why I'm doing this. You know, so in the end, what I would recommend, my conclusion to all of this video, all of this sports betting university, first, best advice I can give you, be skeptical of everything. Be skeptical of everything I said in this video. Test it, learn the math, understand it for yourself, decide whether or not I'm full of it, right? Also, take your time. Build up the knowledge. Start with small bets. Don't go out and put all of your money into this until you really know what you're doing. It's okay. There will be more bets tomorrow. One of the things that I had to temper is, as soon as I understood the math, I was like, I got to do this more. You got to temper that fear of missing out. There's going to be more bets tomorrow, but you got to take it slow and build. You'd love to be where I'm at, or you'd love to be where Alex Monahan is. You can get there, but you have to build up to that. Okay? Recognize that you have to manage your portfolio of risk as an individual, just like the sportsbooks have to manage their portfolio of risk as sportsbooks, right? Understand that variance is going to be a part of this. You are not going to win $1,000 every day. No, you are going to win over time if you are doing good work with the tools Oddsjam provides. Absolutely. But you are going to have losing days. You're going to have losing weeks. There will be losing months. It is going to not be fun, but you can understand when you are playing well, but still losing on the scoreboard. Closing line value helps a lot with that. Go look those up and understand those. Understand that the opportunities and the way things work today, the way we're finding positive EV plays today, is going to evolve. In advantage gambling of all kinds, opportunities have a lifespan. The things that are profitable today may not be profitable tomorrow. So we always have to keep questioning and improving our processes so that we can find those new opportunities when they arise. Sometimes it'll be new books coming into the market that we can find positive EV plays at. Sometimes it'll be new kinds of positive EV plays. Sometimes it'll be doing things that are more complicated or more exotic. We're going to go where we find the action, when we all need to be constantly trying to figure out where are those opportunities, right? So keep questioning and improving your process that you develop for yourself, just like I'm questioning and trying to improve mine. We're all going to need to do that. Finally, I just want you to have fun. Don't do this just to make money. This is not a good place to try to build a career in professional sports betting. It's a grind. It's like being a professional poker player. It's not great. It's a great side hustle. It's a great hobby. What kind of hobby can you go and make a couple $1,000s in a night? That's a fun hobby. But recognize that this is not probably the path to getting rich quick, but it is a pretty good side hustle. But in the end, if you're not having fun with it, go find something else to do where you can make some money. This is not for everybody. And certainly when you have those down days or down weeks, you're going to question that. And you have to decide, is my risk tolerance and is my ability to handle those swings worthwhile for that profit that you're going to make over time? So with that, I wish you the best of luck. And, the luck's a lot easier when the math is in your favor. Right. And that's where, I think learn these tools and the math will be in your favor and the luck will be in your favor as well. And so I hope to see you soon on Twitter, on the Oddsjam Discord, and any of my channels. You'll find all of that at atrainbets.com. But I really appreciate listening to this. Hopefully you learned a couple things, and hopefully we can all become better, sharper sports bettors together, make some money, and evolve this industry to be the kind of mature, reputable industry it should be when you literally have sportsbooks now at major sporting venues. You have sponsorships all over the place. The sportsbook industry needs to elevate to earn that kind of partnership. The dollars are there, but I think it's time that we help elevate the sportsbook industry so that this is on par with the financial institutions that they really are. Let's keep supporting Oddsjam and supporting each other. Thanks, everybody. Have a good one.